Our session today, we will look at the trial balance. The trial balance is simply a list of balances extracted from the ledger accounts. So it helps to show the accuracy of our debits and credits. So we're going to rely on pairs also to help us determine which one goes to the left and which one goes to the right. So pairs usually gives us what is taken to the left and what is taken to the right. So debit and credit. Okay. So this trial balance you're seeing here has all figures on one side. You need to know which one will go to the debit, which one will go to the credit. So if you're accurate, the figures should balance up. So now what is a trial balance again? I said a trial balance is what? A list of balances from the ledger account. So having both the debit and the credit at a specific point in time. So the rule here is that the total debits must be equal to the total credits. Okay. And the purpose of the trial balance is to check the arithmetic accuracy of these entries, to detect if there are errors like unequal postings, to also um, prepare financial statements, which is the income statement. We use what? We use just that. Now, Payrolls here stands for what? The purchases, the expenses, the assets, all these have a debit balance. On the credit side, we have the revenues or capital, liabilities, and sales. So you tell me, bank, where would it go? Bank will go where? Debit or credit? That will be a debit. Cash will be what? A debit. Why? Because an asset. How about debtors? What will it be?
Hello, sir.
Capital will be
Hello.
where?
Hello.
Yes, Shilesh, I can hear you. Where will capital go?
Yes, I was saying I couldn't hear anything. I sent even a message. I don't know if you saw it.
All right, so we're looking at how to balance up the trial balance. So you should be able to tell me where the credit, which one goes to the debit. So we started with bank, we are debiting, cash, we're debiting because the assets, current assets. Capital, where does it go?
Uh, Don't put
Capital
to
go to where?
to debit.
Credit, because it's a revenue. Uh-huh. What else?
Then
The
creditors,
debtors,
the debtors on the debit side.
debit side, yes, because debtors are current assets, yes.
Then credit on the credit side.
Creditors will
Creditors.
be credit, uh-huh, yes,
Then drawings are also credited, right?
yes. Drawings are where? They're debited.
Electricity
They reduce our
or drawings are debited.
Yes, they reduce the capital. Drawings are money
Okay.
to remove for personal use.
Yes.
Electricity,
An expense and it should be
will be what?
debited, right?
Yes.
Furniture uh,
Furniture.
should be debited.
Why are we debiting? Because
It's
it's a fixed asset.
select with a fixed asset. Yeah.
Mm-hmm.
Office
Yes.
expenses will be debited because the expenses.
Office expenses we debit because they're expenses. Yes.
Then sales, they are credited.
Purchases first. So purchases, where do they go?
All purchases, we are debited.
We're debiting under pairs, the first one. Uh-huh.
Um, Salaries and wages are under
Sales,
expenses. Of
sales,
sales, we are crediting.
crediting, yes.
Then salaries and wages, those are expenses,
Mm-hmm.
we are debiting.
And debiting,
Uh,
correct. Okay. So this should be at your fingertips, posting which one goes where. At least that should not be a problem. All right.
okay.
Then we go to our actual answer. Let's check to see whether we are correct. Okay. So we need
Okay.
to see whether it's actually balanced in that case. So we're looking at this question carrying 15 marks and see whether
Yes.
the figures are going to balance. So let's go to our solution sheet and see
Okay.
whether our figures balanced. All right. So here is our output. It is showing that. So let's check the accuracy um, and see whether all the figures that we entered were correct. So here they are. Our bank we debited. Okay. Our cash we debited, correct? Capital we credited, debtors we debited, creditors we credited, drawings we debited, electricity we debited, furniture we debited, expenses debited, purchases we debited, and sales we credited, and salaries. Are they balancing up?
Yes.
Yes, they are. Okay. So please on the drawings, that's where you had missed it, right? We're together.
Yes.
Don't forget
Yes.
that,
Possible. Okay.
right?
The
So
drawings are always debited.
yes,
Okay.
debited. So now we want to learn how to prepare now the income statement using the information that we are given. So remember the format of the income statement. So we're given the following trial balance, 25 marks. Mm. Especially, I'm sure you're going to get an A in this course because this is very, very easy compared with the tough things that we're looking at. Okay,
Okay.
so we need to prepare an income statement for this information that we have. So what do we
Okay.
start? We start with the income statement. Remember the format. Start with our sales. Mm-hmm.
The income statement.
So what are our sales figures?
So we're starting with sales revenue.
7,700.
So sales here. Uh-huh.
7,700.
So we're going to come up with the what is the job of the income statement to produce what? To produce our net profit. So sales is here, 7,700, right? Uh-huh. Then next, what do we do?
Less.
Sales less cost of sales.
Is it not less cost of sales?
Yes,
So
less cost of sales.
less sales returns.
Okay.
Oh, okay.
Sales returns. What's our sales returns?
100 question.
Uh-huh. What do we get?
7,600.
What do we call that?
With on gross profit.
We call that what?
Gross profit will come. I don't know.
7,000 what?
600.
Yes,
What's our sales
7,600.
turnover?
Oh,
Okay.
yeah.
Then we go to now the cost of sales. Cost of sales. So cost of sales starts with what? Purchases.
The purchases.
Uh-huh.
Plus,
What do we have as our purchases?
we have 2,600.
2,600. Uh-huh.
Less
So what do we
purchases
do with our 2,600 there?
Sorry, I'm a bit lost. After the turnover, we're now on cost of sales.
The title is cost of sales. So these items are falling under cost of sales. We're calculating the cost of sales,
All
right?
right.
So start with purchases. What is our purchases? At
Yeah,
2,600.
what is it?
Uh-huh. Okay. Then we add if there are any carriage inwards because they're part of purchases. Okay, they're not there. All right. Then we list what? Purchases returns.
Returns.
What do we get? 60 quarter.
2,000.
What do we get? Subtract
It's 2,540.
2,540. These are our net purchases. Uh-huh. And what do we do next?
I think we also subtract if
Uh-huh.
there's any closing stock.
Yes, we subtract if there are any closing stock. Okay.
So closing
Is there any
stock.
closing stock?
Yes, I think that's one you're showing at stock on 1st September
Mm-hmm.
2018.
How
Which
much
is
is that?
1,900.
Okay. Less closing stock. 1,900. Uh-huh. 1,900. So what do we get there?
1,900 less 1,540. 360.
360. So this is what we call the cost of what? Goods sold, right? Cost of sales. We less the cost of sales. So this is cost of sales. When we subtract it from the above, what we get? 360.
Get 7,240.
What do you get when you subtract?
7,240.
7,240.
40.
Okay. All right. Have we left anything before we go there? We forgot our opening stock here. Opening stock. We're supposed to start from here. What is opening stock? Opening stock should start here. What is opening stock?
So I think you have made a mistake here. There's stock down there which is indicating 30th September
That was
2018.
the opening stock, yeah.
This is
So this was
closing.
supposed to be closing stock.
Yes, so
1,100 was opening stock.
opening. Yes.
So
I'm
opening
just following
stock
what you're
was it?
telling me. So you made a mistake. So
True.
opening stock
So
is
we have made
here.
a mistake.
We add this and subtract that. What are we getting? It's good. If you make the mistakes now, it's better than in the exam.
True, sir.
Huh?
True.
So the experience
So
of
we
practice
was
content. So add this and subtract what? Purchase returns. Opening stock plus 2,600. What do we get? Minus 60.
so it's supposed to be 1,250.
Yes. So add this plus that minus that. 19 plus purchases 26 minus return 60. What are we getting?
Wait. Okay. 19 plus 26. 26 is what? Purchases. Okay.
Yes.
Minus 60, which is the returns. It's giving us 4,440.
4,440.
40.
Then we subtract what? The
Closing
less closing
stock.
stock. What are we getting?
Three 150, 3190.
3190.
Uh,
When we subtract 3190 from there, what are we getting?
190 minus 76. It's getting 4,410.
4,410. So this is got our gross profit.
Okay.
4,410. So now if there are other income, we can add them there. Do we have any other income?
Check. No.
Discount
Discount
received.
received.
Yes.
Yes, discount 15.
Discount received is what? 15.
15, yeah.
So what becomes our total income?
425.
425. Okay. So our total income or gross profit is what? For what?
425. 425.
What 425.
Yes.
Then we less expenses now.
Okay.
So what expenses do we have?
Good in
I have salary,
wages, yeah.
electricity and water,
Electricity, let's
So
start.
wages,
let's start
We
with
start with
wages.
wages.
Yes.
How much?
1,720.
1,720. Which other?
I think it's electricity and water.
So electricity and water. How much?
85.
85,
85. Next.
Telephone.
general expense, wait, okay. Telephone, yes, advertising as well,
How much is telephone?
50,
50.
yes. Advertising,
Advertising. How much?
advertising is 155,
155.
then we have petty cash expenses,
Petty cash expenses.
which are 50,
How much?
50 quarter.
50 kwacha.
Then we
Then
have general expenses,
general expenses.
which are
How much?
150,
Huh?
115.
115.
Then we also have repairs and maintenance,
Repairs.
which are 230.
230.
Mhm.
What else?
That's all.
That's all.
Okay, if there was discount allowed, we would have put it there as an expense, eh?
No,
Which
yeah.
one?
Yeah, discount allowed is different from discount received. Okay?
Okay.
So the total expenses are coming to how much? 2405.
Okay.
So total expenses 2405. So less expenses. When we subtract from that, what are we getting?
4425 minus 2405. 2020.
2020. So this is called our net what?
Net
Profit.
profit.
Okay, 25
Total.
marks. All right. 2020. So are we together?
Yes, I am.
You can remember this.
I think this is remember.
All right.
It's different than
Any questions?
Okay, so maybe when we're finding the cost of sales, we start with opening stock, right? Opening stock, purchases, less returns.
Uh-huh.
Okay. Then less closing stock.
Exactly.
Okay.
Okay.
Okay. Okay, so in this case, we don't have like opening stock and other things, right?
Yes, we
Is
don't
there
have
We
another
had
method that has that one that we can go through?
So now at least we have the income
Mm-hmm.
statement. So if there are things are missing, you need to
Mm-hmm.
understand that you can always do what? You can always ignore them. It's not everything that will be there. Some things may be missing. Okay? Don't
Okay.
always wait to be, sometimes there's no sales returns. Okay?
Mm-hmm. Okay.
So now let's go to um,
Balance sheet.
balance sheet now. How to come up with the balance sheet. All right, so we have a balance sheet there.
maybe sir, just there.
Uh-huh.
I think I tend to always get confused. What's the difference between balance sheet and trial balance?
Thank you for the question.
Can you answer that?
She also wants the answer.
Confused. I also get confused. But they look the same.
I don't know the difference yet. I tend to mistakenly think it's the other, but I don't know.
Balance sheet is a list of balances, debits and credits. The no, trial balance is a list of debits and credits. That's a trial balance. But balance sheet, this is a big book. It's a financial statement which shows us what you have at that moment, assets and liabilities.
Or like it tells you
Yes.
exactly the position of the company, like what it is financially.
So the um remember the accounting equation, assets is called what?
Capital plus liabilities.
Yes, capital
Mm.
plus liabilities. Okay.
So does it mean that the trial balance will show the individual ledgers, while the
No,
balance sheet will just show uh,
yes.
the balance sheet
The
will just show how much we are owing, as in total. That's what it will show. It will not be saying we are owing Mr. Tembo, Mr. Waria, Mr. Hangandu. It will just say the company is owing so much. As
yeah,
that is that correct?
yeah, that's correct. Yeah. Okay, so let's go to our balance sheet. So balance sheet, we come up with um, the assets. We call them non-current assets. Okay, non-current assets. So we start with what? There any non-current assets? Or the fixed
Mm-hmm.
assets? Or what? Buildings? What else we have in the
Buildings, yes,
fixed
and
assets?
land,
Land,
land, office equipment.
office equipment. Okay.
Yeah.
So we have what we
Mm.
call cost. If there's any depreciation, then the net book value. So what is the cost for building?
Oh, cost for
60,000.
building is it? Uh-huh. Ah,
60,000. Land, 100,000.
land it's at 100,000.
Office equipment,
It's
62,
62,300.
300. There's no depreciation for each of them. So still 60,000, 100,000, 62,000, what? 300.
300.
Okay. So what we have as our total um, uh, fixed assets?
Um, 60, 100, 122. So it's 222,300.
Okay, 200 and?
22,300.
So I'm a bit lost.
Huh?
What's the last column? NRV.
Ron?
The last column cost is depreciation.
Non-current assets. These are non-current assets. So we have what? The cost value, the depreciation, and the net book value. So if there was depreciation of 10,000, the balance here would have been what? 50,000. So they have no depreciation in them, so leave them as they are. All right.
So where are we getting? I'm confused.
Mm,
The last column, what's the amount at the bottom? Is it still the same amount
60
for
what?
all of them, right?
62,300. 62,300.
Okay.
So we're here at
Okay, since there's no
60,000.
depreciation, we've left the column just in. Okay.
What's the question?
I think she's asking about the first column there is for cost at which
Cost.
the item was bought at. And then
Yes.
the next one there is depreciation, if there are any depreciation figures showing. Then the last one is net book value, which is a cost less depreciation.
So there are no depreciations. I've seen. They were
Yes.
just adding.
Yes.
Uh-huh. Okay. Yes, you may proceed,
Okay.
sir.
Then we go to now the current assets. What current assets do we have?
We've got cash.
Who's that from? The most less liquid is cash is down there. Then
Yeah, we have cash.
cash is how much?
uh,
22,
yes.
500. Then bank, do you have bank?
No,
There's
but
no
we've got
bank.
store.
Then we
Got
go
stock.
to
Stock.
account debtors.
That's accounts payable.
Yes.
We have
Account
got
receivable.
22,000. Oh, account receivable, sorry.
Yes.
We have got 18,200.
18,200.
Then we have got stock.
We have stock. But they're not prepayments. No. So stock.
For stock, there are prepayments would have also added them there.
Yes.
All right, yeah, part of current assets.
Stock is what? 2,000.
Stock
Who's our
is
money?
2,000.
1,000. So what's the total?
2,000 plus 18 to less 22. What else? Huh? Wait. She helped me.
2,000 plus
Mhm. Plus
18,200
2,500.
Yes,
Okay, 18,500.
Yes.
plus 2,500.
Yes, she called me.
What are you getting?
Getting
Yeah, I was
what,
so
2,000.
Shilesha, can you mute yourself?
2,800.
What are you getting?
For 2,800. For 2,700. Sorry.
2,700.
42.
Okay. What's the total?
42,700.
42,700.
700. Mhm.
Okay. So we go to we add them now to get our total assets.
Mhm. So which is there's 222, 300. What's the figure there on top? 222, 300. Am I right, sir?
What is the total?
It's giving you 265, 265,000.
200 and
65.
265,000.
Mm. Mm.
Okay. So we go to the other now side here. So we're done with the assets. Okay. So we go to capital plus liabilities. Okay. So capital, we have finance by capital. Capital, what is our capital?
20,000.
20,000. Do you have any net profit? We can add to this. Less drawings. If we have drawings, we subtract. There's no drawings, yeah?
No.
Okay. And liabilities. What liabilities we have from Congolese? Not
Accounts payable.
what?
No, not payable. What is that?
Not payable. These are creditors.
So,
So we have not payables and here.
accounts payable.
Yes. So we have what? What was the total here?
5,000.
220. It was 265 or 260? 265?
265.
So
Okay,
here,
422,300 plus
not payable, how much?
220. Sorry?
So not payable, we're getting what?
Not payable, again 35,000.
Okay. Not payable, that is 35,000. Yes.
Then not payable 35,000. Account payable 25,000.
Not
Then
payable.
salary is
Not payable is how much? 35,000.
uh-huh.
Then
Then
accounts
accounts
payable
25,000.
25,000. Then salary is payable
5,000.
5,000.
Oh, it's balancing. Yeah.
What's the total we're getting?
265,000.
165,000. So does it tally with what we have there? Assets equal to capital plus liabilities. It's tallying, right? Yeah.
Oh, so this which we have done now is a balance sheet.
Yes.
Ah, okay. Oh,
The balance sheet must always balance.
so now in the sequence, sir, we'll start with the ledgers.
Yes, the
Trial
ledgers.
balance. Then we
Yeah.
come to trial balance.
The ledgers,
Then
trial balance, income statement, then the balance sheet. Okay.
So which one of this? Which one of this is then? The income statement is the same as the profit and loss account.
Income
How do they
statement
differ?
is the same as what? The profit and loss account. Okay. The financial statement is the balance sheet.
So if they say prepare the financial statement for this account, means that I ask you to do the balance sheet.
Exactly.
Okay.
So list the accounting conventions dealing with the generation of income and losses. What are the accounting conventions dealing with income and losses? We have what? The revenue recognition principle, which says that revenue is only recognized when it is earned. We have the matching principle, which says that expenses should be matched with the revenues. Okay, that help them generate in the same accounting period. We have the accruals concept, which says income and revenues are recorded when they occur. We have the prudence concept, which says losses are recognized as soon as they are foreseen, but profits are recognized when they are realized. And the periodicity concept or accounting period, it says that the life of business is divided into artificial periods like months, years. So to measure income, you need to abide by that. Okay. So these
Hello,
are
sir. Sorry, I lost the class. Is this recording going to be sent? I just received the client. I don't know if I might finish the class.
what's your question?